We are about to live. Why am I nervous?
You said every time before this you get nervous.
It's great this day.
I know you've been doing this for what, 2 years?
Yeah. Hey everyone. It is 10 o'clock and it's a little bit later than normal. However, let me make sure you can hear me. If you can hear me, see me, please let me know. Leon and I had some technical difficulties earlier today with our system, so we were not able to go live at 12 noon. So we're coming to you all live now. This is showing our dedication to you all. There's a lot of information in the stock market that's happening daily. And as COVID-19 kind of progresses and, you know, the markets react to it, we're trying to provide you all as much information about the market as possible, because there are a lot of people who feel like they should run away from the market. There are a lot of people who feel like they should run towards the market. And as Leon and I build out the platform, Investing Education Academy, our goal is really to bring the general population as much information about the stock market as possible and kind of to demystify what, you know, some of the key terms, what's happening, trends, and what the naysayers may be saying, and also what the snake oil salesmen are trying to tell you how they can help you make $10 million in one day. And so,
or turn $100 into, you know, $1 million overnight.
Yes. So, you know, we're just bringing this to you because, again, for those of you all who are watching and don't know us, Leon and I have been investing in the stock market since we were about roughly 15. We started off in mutual funds. We then moved on to stock. Leon went into options trading really heavy. I went into general financial planning. Now we're coming back together. We're using all that experience to really share with you all strategies, tips, and also just a greater understanding of how the stock market works. And it's been crazy. So today in particular, we're going to be talking about why the market is up 20% off its recent lows when roughly 16 million have just applied for unemployment. So if you have questions, if you want to know about stocks or you have a question about the market, please let us know. Additionally, if you have the ability right now, please share it, because we're going to be providing what we think is really relevant information to maybe a population of people that normally don't get this type of engagement or knowledge. Share it with them. So Leon, anything you wanted to touch on that I might have missed?
No, that was pretty good intro. I'm good.
Yeah, no, I mean, within a couple of minutes, we already have about 10 plus people watching. And okay. I definitely want to give a shout out to Garen, who's also a fellow options trader of Leon's. He's my god brother, Mandela. You know, this guy, he's very plugged in. He's already kind of started talking to different organizations about having Leon and I speak to them about the market. So, you know, definitely thank you for that. And Madison, if I know you, you're probably about to share this like right now. So if your audience has any questions, you just feel free to type it in or let them know they can type it in once you share it. Yep, I see people starting watch parties. So this is all good. I mean, right now we're in a really crazy environment. You're talking about a market that was down roughly 3% today, but then you have these 16 million people applying for unemployment, but all of a sudden the market is 20% up off its lows over the last like few weeks. So Leon, if you want to dive into like some of that topic.
Yeah, so it's stuff I've been reading like in the press a lot recently is investors and some of the media are saying, you know, capitalism is evil, capitalism is terrible. You know, you have all these rich people in the stock market making all this money. You know, the market's up 20% of its recent low, yet 16 million people just apply for unemployment. And what people don't really understand is that, so people are looking at it as of right now, like right now, 16 million people just filed for unemployment and the market is up 20%. What people don't understand is the market is a forward-looking mechanism, right? So the market typically trades off of fundamentals. By fundamentals, I typically mean sales and profits. That's usually what the market trades off of. As of right now, because there's no sales and profits right now are totally in the toilet, and there's no, like, companies don't have any insight into the future right now. So what the market's trading off currently is the COVID-19 virus. And we all know right now the death toll is terrible. You know, we're looking at sometimes about 2,000 deaths per day. And a lot of cities and counties actually have their curve still rising. Now this week there's been a bit of good news that some of the states' curve is actually starting to flatten or even come down. So the reason the market is actually up 20% is generally because, again, the market is looking forward. So the market's saying, okay, we may have been through the worst, and now we're coming out on the other side, and things may start to flatten, death tolls may start to drop, and therefore business, the outlook for business can start to look better in the future. Now, again, we're talking in the future. Right now, things look terrible, but the market doesn't care about right now. The market cares about the future. It's the same way when anybody buys like real estate, right? So if you buy a house now, you're betting that in the future it's going to go up in value. Same thing in the market. The market looks at it and says, okay, what are the earnings today? And then what are those earnings projected to be in the future? An example is, I don't know if a lot of you watch, there are times like when companies report their earnings. A company may report a stellar quarter, like they may come in with 20% gain in earnings, 20% gain in sales, which is a stellar quarter, but the stock tanks. And people are always like, how the hell can the stock drop if they just reported such a stellar report? Well, it's the guidance provided by the company. Guidance usually goes out to the next quarter or the next 2 quarters. So if a company comes in and says, okay, we had 20% this quarter, the current quarter, growth in sales, but in the next 2 to 3 quarters, we see sales dropping, 3, 4, 5%. The market then is going to say, okay, well, then we need to discount that back to today and drop the price. So the market is always looking forward, it's not looking at right now. What happens right now is already priced in. So the market right now is up a bit, just because the news of late has been pretty good. And again, they're not trading on fundamentals, because if they're trading on fundamentals, the market will be down another 20% every day. Because right now companies can't even see into the future of what their earnings are going to be because the economy is closed. So right now the market is just trading strictly off of how is the virus being treated, and how the recovery is happening. And right now the news of the last week or so has been pretty good. So the market has got a bit of a bounce. It's at the bottom. Nobody knows. We'll never know. But one thing we do know is that the news of late has turned somewhat positive.
Yeah, and so also what is also another portion that's contributing to it is what's considered business overhead expense cleansing. And it's, some people may refer to it as corporate cleansing. There have been a lot of, a term that I don't necessarily agree with, but there are a lot of businesses right now that have made hard decisions that they weren't willing to make before. And in making those decisions is cutting some staff, cutting, a lot of shrink, or that's what the companies really don't need, this loss, where they're losing funds based off of maybe wasted employee hours, material that they don't need, different things that they oftentimes would just spend money on. And it's a line item to them. It's just a line item, so they spend it. It's part of their operating procedure or operating budget. Right now, you have employees working from home. You have a lot of companies that have just completely lost how would I say? The staff that normally would be on their payroll as an expense, they're gone. I was trying to think of a sensitive way to say it, but I couldn't. And in addition to that, you got to think about what's happening to competition. There have been a lot of smaller companies that just didn't survive, and all of a sudden the contracts or equipment, all these things flooded to companies that were positioned to grow. They're growing faster. And so, this is an environment where some competition has been eliminated, which creates just straight front runners in the industry, which is driving the market up as well.
And another thing with that is like Brent said, a lot of people right now are working from home, and companies are now realizing that they actually don't need as many people on site, and that means they may not need as many office spaces. So this can actually, so once the economy actually comes back, this can actually be bad for some industries, specifically commercial real estate, because companies may realize, we have all these offices, but yet our employees shown during the COVID situation that they were still productive from home. And also going forward, they're saying there may not be a vaccine for another, 18 months. So when the economy does come back, a lot of people are like, look, I'm not going to the office. Like, I'm just not working there. So companies are going to look to cut expenses on some industries coming out of this that were gangbuster before. Things like commercial real estate, and in particular REIT stocks that invest in commercial real estate and real estate in general, pay out a high dividend. Right now, those have been decimated. And anybody who's been watching this the last few weeks, Brent and I have been focusing on companies and industries that have been just taken out totally by this pandemic. But real estate is one I'm not really touching right now, just because, again, and commercial real estate in particular, because again, when things come back, I'm skeptical whether a lot of these companies are actually going to, have as many offices as they had before, because it's been shown now for this past month, 2 months, however long we're in this, that there could be productivity from people working remotely. And a lot of employees are going to demand that, because they're going to be like, look, I'm not going back to that office until there's a vaccine. Don't want to bring it home to my kids. Don't want to bring it home to my family. So that, that definitely could be an interest that'll actually be negatively affected on the other side of this, which is commercial real estate or REITs.
Yep. And for me, I've been playing it a little different. I'm still invested in the real estate investment trusts, which are the REITs Leon was referring to. However, I'm looking at real estate investment trusts that invest in senior living facilities. So
Right.
one of the things that is not going to happen is the fact that our senior population, also those who've been affected, that require some type of long-term care, they're still going to need a place to stay. And there's still going to be families who aren't equipped to handle the medical needs of their families. So I'm looking at REITs that deal with senior living. Particularly, I'm dealing with REITs that do deal with senior living that buy the real estate in which they build the facilities. Because even if everything crashes and burns with the senior living facilities, which I don't think it is, the aging population is accounting for what would have been like the $17 trillion industry coming up. You still have the opportunity to gain from the real estate that they're acquiring. So I like, it depends on the position.
Yeah,
so,
and like that's what I was saying, commercial real estate.
Yeah.
Whereas REITs that deal with senior living, well, yeah, we'll do fine. I mean, that's one of the biggest portions of our population, which is older Americans, and I think it's like every day, like 10,000 people turn 65 or something crazy. So REITs dealing with old, I guess, senior living homes. I stopped myself. Senior living homes are going to do a lot better than commercial real estate REITs, I think.
My mother's watching this, Leon.
hey, I'm just saying, I caught myself.
So, I mean, right now, as you all look at, like, really from an economy standpoint, like, how is it that, again, 60 million people lose or are filing for unemployment, but then the market's 20% up? And we've done what we can to explain it to you, but we also want you to understand that 16 million people who are have lost positions, they're also going to be well positioned when the market, some will be well positioned when the market starts to recover, because there's been a huge loss of talent by many industries. And some, like we said before, we're not trying to sugarcoat it. Some will not need that. It's not necessary for them. And others will absolutely try to regain their employees and or the new talent that's in the employment pool. So you got to think about, when you're starting to invest, what is your strategy? How are you looking at the companies you want to invest in? And not only how are you positioning yourself, how are you managing your money right now to have money available to actually invest in the market? And so we're not going to go deep into that, but I know, Leon, you're itching to talk about what type of money they should be putting into the market.
Well, as I always say, it's a risk capital, money that you can lose, not money for your kids' college fund, not money that you're putting food on the table with, not money that you're buying medical supplies with, money that you can absolutely lose. That's the only money that should be going in the market. And at a time like this, like I've been telling people, and I say this pretty much every live, if you have money sitting in a bank account right now, that money should be removed from the bank account, not all of it, some of it, and put into the market. Because like I said, we're seeing discounts anywhere from 30 to 90% on quality companies. These are blue chip, the companies that we hear about every day, the companies that we use every day. So, that's why Brent and I are kind of doing this, because we've been hit up so many times over this last, month and a half, 2 months, when the market started crashing. Everybody's like, yo, what should I do? And we've been kind of doing one-offs with people, but now we're like, let's just bring it together and kind of centralize our information. But yeah, I mean, right now it's a golden time to invest in the market. Nothing's overnight. There's no millionaires made tomorrow. There's not that $100 into $1 million overnight. Not happening. we don't know where the bottom is. We don't act like we know where the bottom is. But what we do know, based on probabilities, is that like anything, when you buy something lower than it was when it was higher, you have a better chance of return. Yep. Stocks with the stock that Brent and I are buying right now are down anywhere from 60 to 80%. And we know, 2, 3, 5 years out, they'll be a lot higher. A lot of the companies that we're actually investing in are going to have already, the government has said they're going to be bailed out. So the backstop of the Fed is behind a lot of these companies. So there's always risk, but there's very limited risk in the companies that we're choosing, in the industries that we're choosing during this pandemic.
Yeah, and as always, at the end of this, for those of you all who stick with it, we will be choosing 2 stocks for you that we think you should give strong consideration to. The 2 stocks that Leon picks one and I pick one, and that's our process. At the end of each of these lives, each week, we will be delivering at the end of it our stock picks. And as Leon said, we're building Investing Education Academy right now. So if there are topics that you all, like I've always wondered about this. I've always wanted to know what certain key terms were. I never understood what market cap really meant. What is a floor? What is a ceiling? How does it apply to stocks? How should it apply to my thinking when I'm investing in stocks? All these questions, we would love for you to send us in direct messages, and or if you want to put it in the comments below. Sometimes people tend to send us direct messages, but however you want to deliver it, we're trying to build out the platform to deliver information people want, not what we think people need.
Right.
The market can be complicated, and somebody asked, will WeWork come back? I don't think WeWork is going to come back in the way that it was set up structured before. And truthfully, WeWork already had a failing business model before this happened. So if you want to look at WeWork, their losses were starting to occur the second they IPO'd. So will WeWork survive? I don't know.
Well, WeWork actually never came public, and WeWork is literally a fraud. Yeah. So if you go, whoever asked about WeWork, I would highly encourage you to go look, really dig into what happened with WeWork. But it was literally a fraud. So what happened was when they went to file, you have to put out all your numbers out there, and they're backed by I think it's SoftBank in Japan. I think is their big backer. And so when WeWork put their numbers out there, it was shown that WeWork was losing billions with a B, billions of dollars per year and hundreds of millions roughly per quarter. But and when they came public, when they were going through their roadshow of coming public, they were trying to sell themselves as an IT company. And IT companies always get premium valuation. So their valuation came out at 45, I believe it was like $40 billion, 40 billion with the B. That's what tech companies typically get. They're essentially a REIT because they essentially own and or lease commercial real estate, and then get tenants to use those properties. So they're essentially a REIT. REITs maybe get, and when I say they're worth 40 billion, that was their worth that the investors, that's what they were trying to get from investors on the value of the company. Tech stocks usually get those type of valuations. A REIT may get a couple hundred million to maybe $1 billion coming out. So it was way overvalued. And once their books came out and everyone saw how much money they were losing, it was totally shot down. WeWork never came public. They're not public. Actually, interesting that somebody brought that up. So SoftBank came in because they were biggest owner, biggest investor in WeWork. So they came with a basically a bailout package for them because they were going to fail without some external money. It was a couple $1 billion worth of a bailout. But what happened was, since this whole COVID thing happened, and again, like I said about commercial real estate, all these companies are kind of pulling back from owning a lot of these real estate properties. SoftBank actually pulled out of that deal. And now WeWork, I believe, is taking SoftBank to court, saying that, look, we had this deal on contract, you owe us this money. So WeWork is a total fiasco. So I would say
close to $1 billion when they first issued. They said they were doing, when their IPO filings, I think it was close to $1 billion, 990 million or something like that.
What, their valuation?
No, how much they were losing.
Oh yeah. Oh, it was ridiculous, and their valuation was set at 40 billion, which just doesn't add up. Again, they're not a tech company; they're essentially a REIT. So they were exposed for what they are. The owner of it, the founder of it was kind of a shyster. So now WeWork is I seriously doubt we'll see WeWork come public at all. I could be wrong, but from what I saw and read and kind of went through their numbers, it was a show.
Yeah, and if you guys are out there, you're thinking like, well, then how do I choose? How do I pick? Number one of the questions is, how much do you start with? Start with what you can afford to lose. So I absolutely agree with the response that was provided to Lakia by Marcus. You don't want to put your retirement out right now, but you do want to readjust your retirement. We're gonna talk about 401k allocation in a different one, but for those of you all just who aren't looking at your 401ks, if you have a TSP, a 403b, 401k, single K, safe harbor, any of those types of accounts, if you're not revisiting your allocation right now, you should absolutely do that. We're going to do that in a different discussion. And some of these things we will be actually taking to our Investing Education Academy platform, because it deserves a deeper conversation than what we're having right now. Right. But there are a lot of people in the market that they're going to tote all these things they think they know that they do. In reality, they have no experience in the market, like zero.
Right.
And when you're a new investor, the emotions of investing are very strong, and which is why Leon and I said we decided to do this. We've been doing this since we were 15, and if people want to see our returns, Leon has provided a life for himself outside of any traditional job, trading options for the last 5 to 6 years. I have been investing in the market for the last, 20 plus years. I've purchased real estate with stock money. I've done. We're tested. At one point I was licensed. 7, Series 7, 6, 63, 65, life and health, and I have an advanced certificate in financial planning from Georgetown. And so these things have led us to really we get tired of the noise, and we're like, you know what? We're going to bring you all information that allows you to really grow, to have a safe place to go, because we have very little skin in the game to tell you anything that's not true. Right. We're going to have a membership platform, and it's probably going to be like less than $100 a month to be a part of it. So, and we're still going to do these lives. So whether you catch us here on our platform is going to be a deeper dive into the information, and we provide really good information. And also along the way, we've curated so many relationships with tax attorneys, people who do options trading like full time, to other business advisors who invest in real estate, who flip real estate. And we're going to bring all those people to you all inside of our platform. But even before we get there, we never hold back in these. And so when you're asking us these questions about the market, and actually, Leon, I'll let you answer this one question. One of the people asked, what market should they be investing in? What are the various markets, and what market should they be investing in? Again, I know you have a very strong position that stronger than me, so I'll let you answer it.
So I invest in, I'm in two of the primary markets. I invest, so I primarily invest in futures, right? So I primarily invest in things like oil, natural gas, golds, and options on those. That's a whole different discussion. So that's one market. The other market, of course, is the stock market. But within the stock market, there are many different sectors and industries underneath, the big stock market. So the way I go about choosing my stocks in the stock market is I first find out where are the top sectors in a market, right? So everything in every market, as we all right now always say, everything's relative, right? So you have to judge a number against something else. So I look at all the sectors that are in line with or beating the S&P 500. The S&P 500 is the 500 largest stocks in the U.S. It's considered the market, right? So I choose sectors that are at where the S&P is or above it, that's getting a higher return. And then I go into those sectors and look for the individual stocks that are highest returning stocks in those sectors, and then I invest in those. That's a very, very top down view. It's a lot. That's generally the way I choose.
Yeah, and so if you're looking at the Dow or if you're looking at indices within the stock market and you're trying to decide which indice to invest with, I really would not take that approach. If you're looking at, especially as a new investor, number one, you don't want to spread yourself too wide as a new investor. And then two, you want to look at the companies that you know most about. Now, you're going to get people who, we've seen them, we've been them. So let me just be very clear.
Right.
We're taking some serious losses in this time. We won't show you a portfolio of all 400% rate of return entries. It doesn't happen. We're not showing you the get quick rich schemes. It doesn't happen. But we will show you how we've invested over the last 20 plus years consistently. And in that investment strategy that we executed, we've done pretty well. And most of it goes back to mindset. When you first start investing, the most important thing you have is your mindset on why you're in the market and what you expect to accomplish being in the market. If you don't have that and you're chasing the hot thing or you're chasing the shiny object, number one, it's going to be emotionally draining for you.
Yep. Yeah.
And two, the stress that comes with checking your account every day because you really don't know what you invested in is something that neither one of us would suggest. Mm-hmm. So figure out what you have an interest in, pursuing in regards to ownership, partial ownership in a company, because what stock is partial ownership in a company. And so what do you already know something about? Start researching what you know about, not what is the hot pick for this week. Because if you're chasing these green arrows, like these 3 green arrows or these 3 red arrows scenarios, they're crap. And so what happens is those companies are some of them have gotten so many new investors excited about the idea of investing that now everybody's in, right? So now everybody's in this platform, and many of the platforms work off the same information. So all of a sudden, the heads of these multi-level marketing setups, they say, okay, we're going to release green arrows this week. And of course, if they're releasing green arrows to 5,000 plus people, that makes basically an institutional move in the market. And so with that move, you go in because all these green arrows just popped up. They bought it before they released the green arrows. And now you're in it. It's a pump and dump. And all of a sudden you pump up, like you as an investor pump up the stock price. In some situations, not saying all, they sell off. You're stuck with all of a sudden the red arrows come, but yeah, the red arrows came, but they're already out. And you're left holding the bag. And so you really want to go with companies and you didn't know the company in the first place, which meant you had no relationship to the company. And the emotions take over in that place. The intellect is gone. Now, there's certain things you can do to create stop loss orders, and that's more technical trading. But there are things you can do to take the emotion out, to just set triggers based on dollar moves or percentage moves in the market. If you can set triggers based on your trades, and depending on the platform in which you use to trade, and again, I'm not trying to be salesy, but the reality is we're actually having courses created that are teaching people how to even choose a brokerage platform to buy stock on, because people are like, well, I have Robinhood, I got Stockpile, I got E-Trade, I got and it's Thinkorswim. What platform do I get, and why should it matter for me? Aren't they all the same? They are not.
Not even close.
Yeah, and it's new ones popping up every day. There's some of them are just apps, like you can come through us to buy stock. Well, who's backing it? What platform is it on? What happens if they disappear? Do I have any rights? Do I have any? Don't even start.
It's a whole rabbit hole. Yeah.
Yeah, it's a rabbit hole. It's all rabbit holes. But these are things Leon and I talk about every day anyway. So, and so Mo said, does a sector refer to the industry in which the company operates?
So Mo, a sector is kind of the broad topic, and underneath that, there'll be certain industries. So an example is, let's say computers, right? Computers can be a sector, and underneath that, you can have like database, you can have software, you can have cell phones, you can have microchips. So sector is the high level, and then industry, you have sub industries underneath that, and then you want to drill down. So it's basically like a pyramid effect. I mean, you start at the top, and you want to drill down till you get to the top sector, and then the top stocks within a sector, and then underneath that, the industry, you want to find the top stocks in an industry. Because what studies have shown is that the best returns come from the top sectors. So you always want to have the kind of like the wind at your back, and typically like kind of like Brent was saying, kind of like invest in what you know. All the research I've done is typically the top sectors, the top stocks in sectors are the companies that we know: Microsoft, Apple, Google. There are other ones that we don't know that are smaller, that still have great returns, great sales, and great earnings. But typically, you'll find the top sectors will have the bigger companies at the top of them. So it's just a matter of drilling down sector, industry, and then stock.
Yeah. And we got a question is, so what are our favorite platforms? And anybody that knows me knows I'm gonna say E-Trade. So the reason I like E-Trade is, and it's because I like E-Trade doesn't mean everybody needs to be on E-Trade, because they still charge commission. There are other platforms out there that don't charge trade commissions. But for me, the fact that there's a 1-800 number that I can call and actually talk to somebody as soon as something is going wrong or going right is priceless. Like that commercial is priceless. And Leon, your pick?
Yeah, my pick is so it's Thinkorswim, but they were bought by TD Ameritrade. So now basically TD Ameritrade, when TD Ameritrade bought Thinkorswim, they turned Thinkorswim into their main platform. So really, the bigger one is TD Ameritrade for me. I love it because it's a platform by trader investors for trader investors. So it was founded by people that used to work on Wall Street in the pits back in like the 80s. And when they saw the change coming to computers, they realized their jobs were about to go away, and they felt like, okay, we need to kind of go into the next thing. So they built this thing really effective for people who love research and data. I mean, it's data heavy. So I love it. So for me, it'd be TD Ameritrade.
Yeah, and TD Ameritrade, when you go into their platform, they have 2 separate platforms. So just make sure it's one of them I can't stand. And it's so the Thinkorswim.
You're thinking so TD Ameritrade has their own platform, and now they have Thinkorswim as well, and they're transferring out of TD Ameritrade into only Thinkorswim.
Yeah.
But TD Ameritrade's platform sucks. Thinkorswim underneath TD Ameritrade is the best.
Yeah, that's why I want to be clear. So, you want to, whenever you all are out there, they're going to be a lot, and we're going to go into more detail, but you want to just get a platform that allows you to have a contingency plan and a break the glass or really disaster recovery plan. Because if something goes like haywire in the market, you don't want to get on the horn or even have a live chat that's backed up so far it's going to be 20 minutes out before you can talk to somebody. The market is moving. And although a more experienced investor knows 20 minutes more than likely isn't going to make or break your portfolio, it stresses you the hell out when you're a new investor. We know most of the people who are watching these are new investors, and we want to, for me especially, I want to provide you all with as much information on the psychology of investing as possible, because nobody told us that when we started. And when we started, we had these agents talking to us about Prime America. No offense to anybody watching this with Prime America. And at the time, I asked the person what's a CDSC fee, and he was the president of the organization looked at me and said, "Oh, there's no such thing." And so I was like, no. If we're selling mutual funds, there's CDSC fees, and I want to tell my clients about them. Can you explain them to me? He looked at me again. President of this organization was like, "I don't think you know what you're talking about." And it was recently after Leon and I had read a prospectus, and I knew it was a contingent deferred sales charge. And a contingent deferred sales charge, along with 12B1 fees, are integrated into almost every mutual fund, whether load or no load that you buy, unless it's an ETF, which that's a whole nother thing. But I started really looking at the people who were providing this information and providing guidance to help other people invest, and they didn't know a lot.
Caught yourself too.
And it drove us bananas. It's like, why are these people out here? And not only are they out here, they're accepting other people's money, and they can't even tell you about the investment strategy themselves. Mm-hmm. And so when you all ask these questions, you'll notice Leon and I, we're not pulling up books. We're not Googling stuff as you ask. We have enough experience where we can just answer the question.
And you said books. It's funny. Somebody asked that question before in one of our lives before, and so they're asking what's a good book to learn investing. I said I don't have any, because everything I've learned over the years has been, trial and error. And like I said back then, if you get a book that was written even 5 years ago, the technique. Say what?
It's not applicable.
Yeah, the technique they're teaching in that book may not be applicable today, because again, like I said, the market is a living, breathing animal that changes daily. And so it's so trying to apply this specific technique that it's gonna think it's gonna last the next 100 years doesn't exist. One other point I want to make about when Brent said something talking about the platforms, and having a number to call. A very timely example of this is, and I'm not dogging them, I actually like them. I have money. I have a little bit of money in them still, and it happens to every tech company. Initially, it just happened on a really bad day for them. It's Robinhood. So like 3 weeks ago, I remember the biggest up day, the biggest down day in the market was either Thursday or Friday of 1 week. The biggest up day not history, the biggest up day in the last, I forget how many years.
So since 1938.
No. That was recent. This was.
Oh, wow. Okay, gotcha.
Yeah. So a few weeks, like a month ago, the biggest down day was like Thursday. The biggest up day was the following Monday. Robinhood crashed on Sunday night into Monday, right? So you have people now that were seeing the market totally get crushed on Thursday and Friday. And then, and a lot of people sold out. That was the thing. A lot of people sold out Thursday and Friday, figuring, okay, this thing's going to zero. Let me get out. Monday comes, the market shoots up. I forget how many. It was like 1,200 points, the Dow, and they could not get in. They couldn't do anything. I mean, they saw their money lose on Thursday, Friday, and could not recover it on Monday. People were livid. There's actually class action lawsuits now against Robinhood because of this. One of the biggest problems was Robinhood does not have a general customer service number.
No.
Only way to really reach Robinhood is is Twitter or email. And you know, everyone knows how that goes. It kind of gets you when they get to you. So that kind of goes back to what Brent was saying about having a platform that you trust and that's really good. I like Robinhood. I still have money with them. All companies go through
Robinhood account too.
Yeah, all companies go through. I mean, and they've been fine.
They're not my primary. Before that,
no, they're not. No, they're not my primary. No, they're not. And the reason I have Robinhood is because they were the first ones to initiate no commission trades. So I moved some money over there, got in that for a little while, and then it kind of went through the whole industry now, and most companies don't offer commissions. That's why I still have some money there. But yeah. Actually, so that goes.
I think. Do you remember Scottrade?
Yeah, Scottrade was bought by. I think it was bought by TD also.
Yeah.
No. Yeah. Yeah.
Before Scottrade went out, they either were heading to zero commissions or they were like down to $2.
No, yes, they were dropping.
I don't think they hit zero though. I don't think they hit zero.
Yeah, the zero thing happened to be, and it might be because Robinhood initiated, because remember they came out, they were the first brokerage ever to have zero commissions on the platform. Now we'll talk about this later, but there's a reason why they could do that, and they actually got fined $1.25 million because of kind of what they were doing to make it zero.
Ellie, give me a second. So, Kawan, I got to give you a shout out. This was so fun. Oh. He said the best way to learn this stuff is to hire these guys or go lose money. Hey, Bianca, how you doing? That's not accurate, but you can do this on your own. And actually, our platform is so people can learn how to do it on their own. We're not building a platform to invest for you.
We're not taking anybody's money.
Yeah, like I'm not managing your account. We aren't managing your accounts. I am not a licensed stockbroker anymore. You know, I let my licenses expire because it gave me more freedom to talk to you all. When I was licensed, there were so many licenses, and I actually did all my coursework to sit for the CFP, which would have put me at a certified financial planner. But they're not able to talk to you beyond a fiduciary responsibility framework. There's more to learn than that. And actually, Bianca just said she bought Norwegian this week, and that's a great buy. This one of those companies is down like I think 60% or more.
Oh no, they're down 80 at the lowest. They were down 82%. That was my pick.
I think they're back up to like the 60-65 range.
Okay, so they bounce. Yeah, because with the 20% return, yeah.
So you know, in that space, what we're doing, why we're doing this for everybody watching, and you know, we have a lot of people watching right now. And again, please share this information with family, friends, because there are not enough people talking to us about this who really know this information. And not only that, it's not enough people out there who are talking to us that don't have a whole lot to gain. You know, Leon and I are business people, and we are creating a membership-based platform. And we hope that the information we provide makes you all want to go deeper with us. And we are going to go much deeper in that platform.
Right.
But it's full transparency. And, you know, if you know us, that's what we're about. Let me see. And Lakia said, yeah, but I'm just going to do what you all tell me anyway.
Nah, Lakia, nah. You still remember, everything we're saying is just general information. Please do your own research. Yes. Please do your own research. Because we'll definitely give pointers, ideas, things for you to think about. But you know, still got to do your own research.
Yeah, and the reality is, everybody who's watching this, if we go out and we tell you all, come to our platform, we're going to show you how to quadruple your money in some amount of days, and it doesn't happen. Number one, where does that leave us, integrity-wise? Like, how do you feel about what we said? Is it my fault or is it your fault? Because somebody has to get blamed. And then the question becomes, what happens if Leon and I go on a ski trip and something goes wrong and we don't come back? And only thing you all knew was how to do what we said.
Right.
We're not empowering you all in that space. We want to empower you all with our stories, with our friend circle, to, you know, give other information that's not just ours. So you can start thinking about investing in a different way that becomes yours. And then you can teach it to your kids. You can teach it to your cousins, nieces, nephews, your parents. We have to change the way we're. Right now is one of the best times to be in the place where you can actually invest in the market. And again, it doesn't have to be the nest egg. We're not telling people go cash out the 401ks. Don't pull the money from underneath under the bed. Yeah, you can do that. But you know, one point in time, how much do you buy? I bought one share of a stock that went up, I think, 300% in the course of about 3 years. And that's 100% per year rate of return. So I'm okay with that. But I only could afford one share. And it was one share, and that's all I could get. But I got one share.
And that didn't change your life. It didn't make like that you buy the Lambo, but that's still 100% return over 3 years. That's still money in your pocket. And that's what I hate about when I see stuff online. These people talking about they're gonna double, triple your money overnight. You're gonna, everybody's driving the Lambo with the pretty girls around, and it's like, come on, man. Like and I think what I hate worse, I hate when I see us do it. Like I hate when I see, people in our community do that when we all know it's not real. We all know it's fake, and we're kind of, when financially speaking, in the U.S. a lot more financially vulnerable. So I just hate that whole get rich quick scheme. It's total BS.
Yeah, and normally the people that really win and the people who brainwash you to think you won are the people who are at the top, not even getting money from the system. They're normally getting money from people who sign up.
Right.
So the money flow isn't even from what they're peddling. So I mean, I've done the Kiyosaki classes, and I've and these courses, again, not the Robert Kiyosaki, you're cool, but unless you pour a lot of time and a lot of your money into learning their way of doing it, because they're not teaching you a general way of doing it, they're teaching you their way of doing it.
Right.
We're trying to unlock the thing that's inside you that can help you figure out your style, how to adjust the market. And we did promise to give you all 2 stock picks before jumping off, and we were trying to stay at 30 minutes.
Right. We can do this all day.
I didn't push record.
You didn't? Dude, I told you right before. Yeah. So okay, all right. Well, baby steps.
So what's just before we give the stock picks, does anybody else have any more questions about anything? Liberty TripAdvisor. Kawan asked, do we? I'm not familiar with their stock.
Liberty TripAdvisor. No, I don't. I'm not familiar with them either.
I will Google that though real quick. That I will.
Oh wait, TripAdvisor. No, sorry, yeah. I know. I didn't know. I guess they were bought out by Liberty, but I know TripAdvisor. Yeah, I haven't looked at it.
Is it Liberty TripAdvisor?
I think the ticker might be Trip. I think it might be TRIP.
Yeah, it's Trip. I mean, I've owned Trip, so I'm not sure what.
Okay.
I'm gonna check to see if there's such thing as Liberty Trip just to make sure. And this is another thing. Again, side note, but you all have to be very careful when you're buying stocks, because there are ticker symbols in stocks that have very similar names. Like even in this situation, somebody just asked us about Liberty TripAdvisor. By default, Leon and I would have thought TripAdvisor because have you owned TripAdvisor before?
Me?
Yeah.
No.
I have. I did very well with TripAdvisor when it first came out. Actually, my wife told me about it. And we bought it because she always used it before she went on trips. No technical analysis, none of that.
Right.
Just like a 47% run in that stock by itself. 47% just because she used it a lot. So in this situation, we would have defaulted to TripAdvisor because that's what we know, and that's the bigger name. But the company is actually called Liberty TripAdvisor Holdings.
So is that to TripAdvisor we know about, or is it another company?
It looks like it's a holding company. I'm trying to see if it was no, it's domestic. It's in Colorado.
I think that might be TripAdvisor. Maybe they were bought by Liberty, whoever that is. But another point on like what Brent was saying about ticker symbols and about stocks, a really good example is Brent's pick either last week or 2 weeks ago was Zoom Video. There's a company,
Zoom, right?
Yeah, there's a company out here that has a ticker symbol ZOOM, Zoom. And Brent stock, the stock Brent picks, Zoom Video, the one that we're actually using right now, their ticker symbol is ZM. The other company that's not Zoom Video is ZOOM. I believe they're Zoom Technology. That stock actually jumped, I think 10 or 20% one day randomly because everyone thought it was Zoom Video. And then of course it went up and then crashed back down when everybody realized, oh, this is not the company that we wanted. So definitely be careful when you're looking for stocks that the ticker symbol matches the company that you want, because Zoom, ZOOM, and ZM are two different companies. Brent was talking about ZM, not ZOOM.
Yeah, and it looks like Liberty TripAdvisor is a holding company that's a penny stock right now. It's under $5 a share. Penny stocks, for anybody watching, is considered, and different people call it different things.
Right.
Penny stocks on average, industry standard, is anything trading under $5. So some people think penny stocks have to be a certain amount of cents. That's not accurate. Yeah. No, it looks like it's a standalone, bro. Okay. And so I'm looking at the 5-year chart, Kwan. This thing started at 30 and on a steady decline before COVID-19. So looking at this chart, it was at 30. Now it's trading about 2. Damn. A 45. But this is the thing. When the stock is trading at $2 some change, and it moved 45 cents today, that 45-cent move accounts for a 21% move in the stock. So sometimes people start looking at these things and they get it's an allure to them, because if it's a small move, it can be a substantial percentage of their portfolio either going up or going down.
Going down, that's the hard part. That little few cents move is a 20. Imagine a 21% loss today on what, a 30 cent move. Yeah, it's so you definitely got to watch that. That's why penny stocks are not something I usually deal with.
Yeah. So, Mo said we got to do this all again. We will next week.
Yeah.
Oh, Marcus said, when will the membership start? And do we have a Facebook group we can be added to? We do have a Facebook group, and I will be able to drop that link into this chat in a couple seconds.
So while Brent's doing that, I'll give my pick. So my pick this week is they're called Restaurant Brands. The ticker symbol is QSR, Restaurant Brands. The reason I chose them is because again, we're focusing on industries that are really affected by the COVID-19 issue. They own Burger King, Popeyes, and I believe it's called Tim Hortons, another restaurant. But most of us know Burger King and Popeyes. They're down at the low. They were down 62% from their high. But what people don't understand. So everyone's like, so all mass gathering businesses right now are just being decimated. But restaurants actually have a kind of a built-in hedge. And I didn't know this, so I kind of did my research recently, was that the big restaurants like McDonald's, Popeyes, Burger King, and the like, they get 70% of their revenue from drive-throughs. And right now, drive-throughs are still open, right? So if you had just a total sit-down restaurant, that's completely closed. There's no business going on. There's no revenue. They're just shut down. Restaurants like Burger King, Popeyes, McDonald's, Wendy's, those are still open.
The lines are ridiculous.
The
lines are ridiculous. I drove by.
Yeah, exactly right. And 70% of their revenue, even before this, came from drive-throughs. So in this COVID environment we're in, fast food restaurants are still everyone's gonna take a hit on some level, but they're gonna do relatively well compared to other things like travel, airlines, and cruise lines as things come back. So as the market comes back, these will probably come back quicker because they actually have revenue coming in. They essentially were never shut down. And some of their numbers are the last 2.5 years, the revenue growth for QSR is about one sec. The revenue growth. So the profits are up 2.5 years, about 70%, and sales are up about 11% on average the last 2.5 years. So solid industry, solid company. We all know Burger King, we all know Popeyes, and Tim Horton, which I'm not that familiar with. But they're in a down industry that's affected by COVID-19. They're still getting a lot of revenue because they have not shut down because the drive-through was still open. And even before this, 70% of the revenue came from drive-through anyway. So we're looking at a company that has like a built-in hedge in this environment. So Restaurant Brands, QSR is my pick. And
look here, you said why Norwegian? To echo the sentiment that Leon just gave, without the drive-through, of course. Norwegian, that stock was trading, I think it was $56-$57 a share roughly a few weeks ago.
Yeah, it was like 60, and it was down to, I got it 11, and it was down 82% at its low.
Yeah, so it's an 82% drop roughly. But more importantly, the industry is too big to fail completely. Now, it's not too big to take a hell of a punch in the face, but it's too big to fail. So right now, you say why Norwegian? Because at some point, people will start traveling again. At some point, people will want to get away from this type of cabin fever to get on a cruise, because it's an economical way for a lot of people to experience amazing vacation. And so that's not going to go anywhere. As much as we can go back to the Titanic. I mean, just because it crashed, people got back on eventually. So, you think about industries that aren't going anywhere. Norwegian's one of them. As our Leon's pick last week was Carnival.
No, it was Norwegian. Carnival. And I was gonna say, I picked Norwegian. I picked Norwegian last week. But if you go back to last week's live that we have up on YouTube, and I guess Brent, you can maybe drop that link in there too.
Yep.
I just brought up the fact that so Carnival Cruises had a massive investment by the Saudi Sovereign Wealth Fund. Saudi Arabian Sovereign Wealth Fund dropped almost $200 million into Carnival Cruise Lines. And why they do that? Because they saw the risk reward. The thing is down 82%. Carnival is the largest cruise line in the world. The reason I chose Norwegian, it's too much to go into on this live, but there's a lot of data behind why I chose that, and why I did not choose Carnival. Carnival, and for me, is not Norwegian's a better investment, and we can do a deep dive into the specifics behind why I chose that. But it ultimately comes. I mean, ultimately, what I'm saying is, the Saudi Arabian Sovereign Wealth Fund dropped almost $200 million into the cruise line industry. They know it's not going anywhere. It's like the airline industry; it's not going anywhere. So and it's down 82%. So you don't see discounts like that anywhere in life. So that's why I chose Norwegian and why I chose the cruise line industry.
Which is going to lead you directly into my pick today. Is going to be American Airlines. The reason I chose American Airlines is very similar. People, not only are they not going to stop flying, people are itching to fly. Versus is some industries people just want to stay away from. I don't know. Getting away and being able to travel, see loved ones, this world has become global. And as much as we love the fact that technology has shown that it can leverage a lot of our needs in regards to communication, there's nothing that's going to stop people from that physical touch of seeing a relative, going to a new place, getting an experience, getting away from home. So when people, and also they're getting bailed out. So when you look at American Airlines, they went from, I think it was like 40, 50, I'm actually going to look it up.
They were kind of the same as Delta when they were down. I think at the most, they like Delta, they were down about 65% at their low.
And so, you take a company that's trading at like $30 a share and it drops to 11, and your upside potential is over 100% rate gain potentially, then yeah, I'm gonna buy that. And not only will I buy that, I'll wait 3 years to get 100% rate of return inside of a stock. Because again, think about the math, people. If we are looking at 100% rate of return, that's an average of 33.333333% rate of return over a 3-year period. That's a great return to get from anywhere. And so, and from something that's reasonably stable, you're still flying, your friends are still flying. People, even many of the industries just gave you credits. They didn't refund you completely for the flights that you were missing. So that means they have money on tap. When the government bailout hits, they're going to have, it's not going to put them back to 100, nor will everybody run out the house and jump on a plane. But we are not as cautious about getting back on a plane as some people are in going to a concert. And so, which that's not going to stop either. But, so for that reason, American Airlines is my pick. It's trading roughly $12.30. A share is going to, I think you have over a potential 100% upside gain from it over a 3-year period. So for me, American Airlines is a good choice.
And with our, so another thing, just one last point is like we were saying before, like, you have all these people online that, spout advice on investing and stuff, but they never show you their books, right? They never show you like,
oh yeah,
they'll show you they'll show you today that they made 200%. And then you won't hear nothing for a little while. Then they'll show you that in another 2 weeks they made. So you never see like a consistency of the books. What we're going to do is, one, we're giving our picks every week. We give a pick each a week. But what we're going to do in the next couple of months, we're actually going to open up an account and actually pull some money and actually basically start an IEA fund. That we're going to be able to track that fund, daily, weekly, monthly, and have it. Everyone can see it. We're going to have the returns listed on our website, listed on all of our social media, to show that we're being fully transparent. Everything that we say, we're doing ourselves. It's not about just saying, oh, we made 200% today. Then you don't hear from us for another 2 weeks. You can see what we do you're going to be able to see what we do every day by the fact that we're going to have kind of like a tracker.
Not every day. We said we're going to update it once a month.
Well, it could be whenever we want. It could be daily, weekly, monthly. Yeah, it could be daily. But you're right. Good point. Yeah, one thing Brent and I are trying to get away from and trying to get people away from is looking at their account every day.
Yes.
Like, you know, that's almost the day trading mindset. So yeah, Brent, you're right. We did agree that we would have the
every
number.
month we would do a write-up in
Yeah,
addition
write-up.
to showing you the account.
Right, showing the account. And every month. Yeah, that's a good point.
Yeah,
so so it comes back to transparency. You know, we're gonna everything and also the transparency that we're giving you our picks. You all can track them on your own and see how they're doing. Yeah. Everything that we do, we look at no less than a year, whole time, really 3, 4, 5. I mean, I'm a lot shorter term than Brent. For me, I'll get in and out within between a year and 5 years. Brent typically is in for like life. So but I'm saying that to say we're long term. We're not day traders. We're not looking for a quick turnaround. You know, these are investments, not trades.
Yeah, and that is only going to be inside the membership platform, where we show you our account, because I mean the reality is we're looking for people who are serious about their own stuff. But we're not showing you how, this isn't us showing you our account to show you how successful we are. We're showing you that we take some hits just like everybody else.
Right.
So please don't come to the Investing Education Academy's membership platform thinking, oh, they're about to show us all the secrets about how to become a millionaire. No. You're going to see some negative days. I mean, some periods where it's going to be negative. We're demystifying what people believe about the market and also showing you, okay, it's not so scary. You know, this is something I can do. Oh, I know these companies. These guys didn't pick anything like under a shoe, all ADRs, all asset allocation models, running Monte Carlo reports. I mean, we could talk that language, but nobody knows what it is.
Right.
And so it's going to be more so to show you we are real people making real investments that you really can do too.
Yep.
So with that being said, you guys have our picks. Leon's is again?
Restaurant Brands, ticker symbol is QSR.
My pick is American Airlines. The ticker symbol is AAL. I have to make sure I said it right. Really, we had so many people here, over 50 comments doing this live, and people are still sharing it. A number of people have started watch parties. Please share with coworkers, friends, and whoever else you think can benefit from this information. And we will see you all next week.
Peace.
Hold up, Lee. Give me a sec.
We real with it.
It's real. It's a reality. This is how it works. All right, cool.